Non-performing assets, or NPAs, are loans or advances that have ceased to generate income for the lending institution. Typically, a loan is declared an NPA when interest or principal payments are overdue for 90 days. NPAs signify a critical challenge for the financial health of any economy. They represent a significant drain on resources, impacting profitability and overall economic stability. India, in particular, has grappled with a substantial NPA burden in recent years. A high level of NPAs can constrain credit availability, hindering investment and economic growth. It can also erode public confidence in the financial system, creating systemic risks. Therefore, a proactive approach to managing NPAs is essential for maintaining financial stability and promoting sustainable economic development. The rise of NPAs in India stems from a confluence of factors, both macroeconomic and microeconomic. Economic downturns can lead to financial distress for borrowers, resulting in loan defaults. Sector-specific challenges, such as overcapacity or regulatory changes, can also impact borrowers' ability to repay loans. Willful defaulters, those who can repay but choose not to, exacerbate the NPA problem. Strengthening legal frameworks and enhancing enforcement mechanisms are crucial to deter willful defaults. Governance issues within lending institutions, like lax credit appraisal processes, contribute to bad loans. Improving governance standards and promoting transparency within financial institutions are essential. External factors, such as global economic shocks or natural disasters, can also exacerbate the NPA situation. Analyzing NPAs over the past decade reveals a fluctuating yet concerning pattern. Between 2012 and 2018, NPAs surged due to economic slowdown, sector stress, and lax lending practices. Subsequent years saw some moderation in NPA levels due to policy interventions and improved economic conditions. However, the NPA ratio remains above comfortable levels, requiring continued vigilance. The COVID-19 pandemic posed new challenges, disrupting businesses and impacting loan repayment capabilities. While fears of a massive surge in NPAs due to the pandemic have not fully materialized, potential stress remains. Regular monitoring and timely intervention are crucial to prevent future buildup of stressed assets. Building a resilient financial system requires addressing both macroeconomic and microeconomic factors. High NPAs have far-reaching economic consequences. They constrain banks' ability to lend, leading to a credit squeeze in the economy. Reduced credit availability hampers investment, stifles economic growth, and impedes job creation. NPAs erode the profitability of banks, weakening their financial health and stability. This can lead to a vicious cycle where banks become risk-averse, further restricting credit flow. Stressed assets can lead to job losses, business closures, and a decline in overall economic activity. High levels of NPAs can also erode public confidence in the financial system. Maintaining public trust is crucial for attracting investment and ensuring financial stability. Recognizing the gravity of the NPA problem, the Indian government has implemented various policy interventions and reforms. These measures focus on strengthening regulatory frameworks, enhancing resolution mechanisms, and promoting transparency. The Insolvency and Bankruptcy Code, IBC, provides a time-bound and efficient framework for resolving insolvency cases. The IBC has streamlined the resolution process, facilitating the recovery of stressed assets. Enhanced capital adequacy norms, stricter asset classification guidelines, and improved corporate governance standards have been introduced. These measures aim to prevent the recurrence of factors that contributed to the surge in NPAs. Proactive asset quality management strategies, such as corporate debt restructuring and asset reconstruction companies, ARCs, are encouraged. Early intervention can help prevent the escalation of stress and maximize the recovery value of assets. The Insolvency and Bankruptcy Code, IBC, enacted in 2016, has been pivotal in addressing the NPA challenge. The IBC provides a comprehensive legal framework for resolving insolvency and bankruptcy proceedings efficiently. This has been a significant departure from the previous regime, characterized by protracted legal battles. The IBC introduces a time-bound process for resolving insolvency cases, maximizing value for stakeholders. The time-bound nature of the IBC incentivizes swift resolution. The IBC establishes a clear hierarchy of creditors, ensuring secured creditors are prioritized. This provides greater certainty and transparency for investors. The IBC has improved recovery rates and fostered greater discipline among borrowers. Asset reconstruction companies, ARCs, play a crucial role in resolving stressed assets. RCs acquire non-performing assets from banks, freeing up their balance sheets. They bring expertise in asset management and resolution, maximizing recovery value. ARCs employ strategies like restructuring, sale to strategic investors, or liquidation. Their expertise in asset management, legal processes, and valuation optimizes recovery. A robust RC ecosystem helps prevent the accumulation of NPAs on banks' balance sheets. RCs contribute to the development of a vibrant secondary market for stressed assets. Strengthening regulatory oversight and promoting transparency in RC's operations are crucial. The current NPA situation in India shows a mixed picture. While the overall NPA ratio has moderated, pockets of stress remain in certain sectors. The ongoing recovery from the pandemic and continued policy vigilance are expected to improve the NPA scenario. Constant monitoring and proactive measures are essential to prevent future buildup of stressed assets. The future outlook for NPAs depends on economic recovery, policy effectiveness, and sector resilience. Maintaining a stable macroeconomic environment and promoting responsible lending practices are crucial. External shocks, such as geopolitical tensions or global financial market volatility, pose potential risks. Leveraging technology like AI and machine learning offers promising avenues for improving asset quality management. The challenge of NPAs requires a continued and multi-pronged approach. Stronger regulatory frameworks, efficient resolution mechanisms, and proactive asset quality management are essential. The IBC has been a game changer, providing a time-bound and efficient framework for resolving stressed assets. Further strengthening the IBC and addressing implementation challenges are crucial. The role of ARCs in resolving stressed assets is becoming increasingly important. Strengthening the ARC ecosystem and promoting transparency in their operations are vital. Technological advancements offer opportunities for enhancing asset quality management. Embracing technology is crucial for building a robust and resilient financial system. For UPSC aspirants, a thorough understanding of the NPA issue is crucial. This includes the definition, causes, economic repercussions, policy responses, and the role of institutions like the IBC and ARCs. Focus on understanding the trend of NPAs over the past decade and the factors contributing to fluctuations. Be prepared to analyze the impact of NPAs on the economy and evaluate the effectiveness of policy interventions. Pay close attention to the IBC, its key features, and its impact on the resolution of stressed assets. Understand the role of ARCs and their contribution to the NPA resolution process. Stay updated on the latest developments, policy changes, and current trends. This will enable you to provide informed and relevant answers in the examination.